The cursor blinks. Each pulse feels like a reminder of everything you are not doing. You lean in, eyes scanning the rows of red and green numbers on the screen. The bank account balance remains stagnant, a stubborn, unmoving figure that mocks your ambition. You convince yourself that the answer is hidden in the patterns. If you could just identify the next Apple or Nvidia, the struggle would end. You spend hours tracing lines on a chart, searching for a trend that might lead to a fortune. Your fingers ache from clicking, and the light from the monitor burns into your tired eyes. You look for a sign, a signal, anything to justify the time lost. But every ticker symbol seems like a gamble. You buy a stock, it drops. You wait, it stagnates. The pressure to win is a physical weight, pressing down on your shoulders as you try to outsmart a market that moves without regard for your effort. You refresh the page, hoping the numbers have shifted in your favor, but they never do. You are not just reading data anymore. You are staring into a void, realizing that your strategy is nothing more than a desperate guess in the dark. Stop. Push the chair back from the desk and let the screen go dark. You have been playing a game rigged against your own time. Consider the alternative. Millions of investors never track a single ticker symbol. They do not watch the morning news for tips, nor do they lose sleep over which company dominates the headlines today. They possess a secret that sounds like a myth, a strategy that requires only 5 minutes of work per year. While you hunt for a single winner, they have already stepped away from the chart entirely. They have replaced the chaos of constant analysis with a rigid, automated system. It is called global investing. It is not about being smarter than the market. It is about refusing to participate in the guessing game that exhausts you. Imagine a life where your wealth grows without you staring at a flickering monitor. You stop reacting to the noise. You stop chasing the phantom trend. You trade the anxiety of the daily grind for a calm, mechanical approach that lets the world do the heavy lifting for you. The question is no longer how to pick the next big thing, but how to own everything at once. The trap begins with comfort. You look at the world, but you only trust what is within reach. You invest in the brands you see on your street, the banks in your city, and the companies that dominate your morning news. It feels like a safe harbor because it is familiar. You tell yourself that you know the rules here. You believe that because you understand the local landscape, your money is secure. This is the common mistake that keeps wealth stagnant. You are narrowing your entire financial future to the borders of one nation. You buy what you know, ignoring the rest of the globe. You are tethered to the performance of a single economy, blind to the fact that your savings are hostage to the local cycle. Every dollar you place into a local account is a bet that your specific patch of land will outperform the entire planet indefinitely. It is an act of extreme loyalty to a geographic zone that does not return the favor. You are effectively locking your potential in a cage of your own making, convinced that the view from your window is the only one that matters. The danger is not that you are wrong about your home. It is that you are ignoring the vast untapped power of everything else. Then the local cycle turns. It never rings a warning bell. One morning, the headlines shift from optimism to survival. A major employer misses a target. A local bank tightens credit. The chart on your screen starts to bleed red. You watch the numbers fall, waiting for the inevitable bounce that never comes. The balance you spent years building begins to evaporate in real time. This is where the trap snaps shut. Your pulse quickens. You track the drop every hour, convinced that if you just wait, the bleeding will stop. It does not. The fear takes over, turning a logical decision into a desperate scramble. You look at your account, see the remaining value shrinking, and the pressure becomes unbearable. You cannot take the uncertainty anymore. You click the button. You sell everything, locking in your losses at the absolute bottom. You exit the market just as the storm reaches its peak. You tell yourself it was the right choice to save what remained, but you have just guaranteed your own defeat. This is the death of wealth. It is not the market that kills your potential. It is the panic that forces you to abandon your future when the path gets steep. You have paid the highest possible price for your own fear. Now, consider the alternative. The wealthy do not spend their hours guessing which country will win the next decade. They do not trade based on the daily noise of local headlines. Instead, they buy the world. They treat the global economy as a single, interconnected machine. When they build their portfolio, they are not picking winners. They are capturing the output of human progress across every continent. They own the prestige of luxury brands in Europe. They hold shares in the tech giants driving innovation in America. They participate in the precision of manufacturers in Japan. This is the structural difference. When one nation encounters a storm, another thrives in the calm. Their wealth is not tied to the fate of a single currency or the health of one local government. It is a diversified engine that keeps running because it is fueled by the entire planet. They understand that by spreading their reach, they eliminate the need to predict the future. They do not rely on a single source of growth. They rely on the collective result of millions of businesses working simultaneously. This is how they stay above the local panic. They have stopped trying to outsmart the market and started owning the very engines that drive it forward. Imagine your portfolio not as a list of numbers, but as a map spread out before you. Every region represents a stake in the global economy. You start by pinning a massive, heavy weight onto the United States. This is your core, the foundation that holds the largest tech and industrial powerhouses on the planet. It is the anchor. You move your hand north, placing another significant slice of your capital into Canada. You continue across the map, adding Australia to the mix. These are your developed markets. They are stable, regulated, and reliable. You are not betting on a single outcome. You are claiming a portion of the entire developed world. When you view your wealth this way, the fear of a local dip vanishes. You are no longer looking at one country in isolation. You are looking at a vast, interconnected landscape of production. Each pin on the map represents a pillar of your long-term security. You can see the reach of your money spanning oceans and borders. This is the architecture of stability. By mapping your assets across these giants, you ensure that no single border can stop your growth. You are building a structure that is as wide as the world itself. Now, look beyond the established borders. To truly capture the momentum of the world, you must tap into the rapid acceleration of emerging economies. You allocate a smaller, potent portion of your capital to regions where infrastructure is rising from the ground up. These are the growth engines of tomorrow, where the pace of change is measured in double digits. You place your markers in fast-growing markets, capturing the raw energy of new construction, expanding digital networks, and rising consumer demand. But growth creates its own friction. To prevent the ride from becoming too volatile, you introduce a layer of bonds. Think of these as the suspension system of your portfolio. When the market hits a bump, the bonds compress, absorbing the shock before it reaches your core wealth. They provide a steady, rhythmic pulse of interest that keeps the machine moving even when the equity markets fluctuate. By balancing this high-growth potential with the quiet reliability of fixed income, you create a system that is both aggressive and protected. You are no longer just holding assets. You are managing a complex, self-correcting organism. It is designed to harvest the gains of the fast-paced frontier while maintaining the structural integrity of a fortress. This is the final layer of your strategy. The ability to grow without breaking. Your portfolio is now a living engine, and it operates on a scale that dwarfs any single local event. Think of it as a vast, interconnected machine spinning across the globe. When a storm hits in one region, a factory closure, a currency dip, or a sudden policy change, the engine does not skip a beat. Because your assets are spread across continents, the friction in one sector is immediately offset by the momentum in another. While one nation struggles through a downturn, a manufacturer in Japan ramps up production, or a tech giant in America launches a new global standard. The engine keeps running. It is indifferent to the headlines that make others panic. It does not pause to check the weather. It consumes the growth of the entire planet, converting every small gain into forward motion. You are no longer tethered to the fate of your home currency or the local news cycle. You have built a system that ignores the noise and focuses on the underlying pulse of global production. It is a machine that draws energy from 1,000 sources at once. It is steady, it is relentless, and it is entirely immune to the isolated shocks that destroy the wealth of the uninformed. You have created an unstoppable force of compounding value. Then, the screen turns red. The numbers that once climbed steadily now slide backward with brutal speed. Across every news outlet, headlines scream of impending collapse. Panic is not a concept. It is a sound. The rapid-fire updates, the frantic chatter on the wires, the visual weight of tickers plunging into the floor. You watch your account balance shrink. It is a physical pull in your chest, a sudden, sharp demand to act, to hit the sell button, to stop the bleeding before everything vanishes. The market is testing your nerve. It wants you to believe that this time is different, that the engine is failing, that the only logical move is to retreat into cash. This is the moment where most investors break. They see the red, they hear the sirens, and they surrender their position at the exact bottom. You feel the urge to click, to save what remains, to end the uncertainty. The pressure is immense. Every cell in your body screams that you are losing. But the global engine does not care about the flashing lights. It continues to function behind the noise. You sit, you breathe, and you keep your hands off the keyboard. You let the storm pass over you. The panic does not evaporate, but the perspective shifts. You stop seeing the red numbers as a catastrophe and start seeing them as the invoice. Every great gain in history has been bought with these periods of sharp, uncomfortable movement. You realize that if you want the reward of the global engine, you must pay the price of the ride. Volatility is not an error in the system. It is the fuel. It is the mechanism that shakes out the fearful and rewards those who remain anchored. Think of it as a toll road to your future. You do not stop the car because you have to pay the toll. You pay it because you want to reach the destination. The market drops are simply the moments where the world is put on sale. By holding steady, you are not just surviving the storm. You are actively purchasing the growth that the panic-stricken are throwing away. You accept the downward swings as a normal, predictable, and necessary part of the process. You no longer flinch when the charts dip. You view the noise as a temporary state, a mere ripple on the surface of a deep, rising tide. You have made peace with the price. You have committed to the long term. Now, remove the human element entirely. You are not a trader. You are an architect of a system. You do not wake up and decide if today is a good day to invest. You do not check the news to see if the world is safe. You go to your bank account settings, you locate the transfer portal, and you create a permanent rule. A fixed amount leaves your account every single month, on the same day. Without fail, it moves into your portfolio automatically. It ignores the headlines. It ignores whether the market is at an all-time high or in the middle of a correction. It treats the investment like a utility bill, a necessary, non-negotiable expense for your future. By doing this, you disable the panic button before the panic even starts. You have effectively removed yourself from the process. You are no longer making choices. You are following a preset mechanical path. The money moves, the assets are purchased, and the engine cycles forward. You have transformed the chaos of the market into a predictable, rhythmic machine. You do not need to be clever. You only need to be consistent. The machine does the work for you, operating silently in the background while you focus on your day. Your machine is running, but check the plumbing. There is a silent leak eroding your wealth every single day. It is called the management fee. Many funds charge you to own them, and they take their cut regardless of whether you make a profit or a loss. You might think 1 or 2% is a small price to pay. It is not. Over 20 years, a 2% fee can devour nearly half of your potential gains. It is a hidden tax on your future. You must declare war on these costs. Stop choosing funds that promise to beat the market with high-priced managers. They rarely win, and they always charge. Instead, look for index funds with razor-thin expenses. These funds do not try to guess the winners. They own the entire market at a fraction of the cost. By minimizing your expenses, you keep every dollar of growth inside your portfolio. You are not paying for someone else to fail. You are paying for your own success. Every cent you save on fees is a cent that stays invested, compounding exponentially. Treat fees as a direct attack on your capital. Seek out the lowest cost path, lock it into your automated system, and starve the middleman. Your wealth is too precious to be drained by administrative greed. The machine is efficient, but it is fragile if you leave it exposed to the winds of life. What happens when your car engine dies, or your roof leaks, or your paycheck stops? If you have no cash, you are forced to break your machine. You sell assets at the worst possible time to cover a basic expense. This is the moment where wealth dies. To prevent this, you must build a shield first. Before you invest another dollar, you set aside 3 to 6 months of living expenses in a liquid savings account. This is not for growth. This is for survival. It is your wall. When the unexpected happens, you do not touch your stocks. You do not touch your index funds. You look at your emergency fund, you pay the bill, and you leave your long-term wealth untouched. This changes your posture entirely. You no longer fear the sudden emergency. You know that your core capital is locked away, growing through every storm. You have created a buffer that grants you the luxury of time. You are now invincible to the small disasters that ruin others. Build the shield, keep it full, and let your investments run undisturbed for the long haul. Now that your shield is locked and your machine is running, the real work begins. It is the work of absolute stillness. You have stepped off the treadmill of daily fluctuation. You are no longer watching the clock. You are watching the calendar. Compounding is not a sprint. It is an avalanche that starts with a single, tiny pebble. In the first few years, the progress looks invisible. You check the account, and the numbers seem to crawl. This is where most people quit. They mistake the slow start for a failure. But you know better. You understand that time is the fuel. Every dollar you leave invested is a worker that earns its own wage, and then those earnings start earning their own. It is a cycle that feeds itself. By the 10th year, the curve begins to bend upward. By the 20th, the growth begins to outpace your own contributions. You are no longer just saving. You are witnessing the momentum of decades. It is not about how much you start with today, but how long you remain in the game. You are building a mountain, grain by grain, year after year. The math is inevitable. The result is massive. You have mastered the only strategy that turns the slow passage of time into an unstoppable engine of wealth. The heavy lifting is finished. You have built the shield, you have set the machine in motion, and you have surrendered to the slow, steady rhythm of the market. Now comes the hardest part for the modern mind: doing nothing. You do not check the balance. You do not refresh the browser to watch the red and green arrows dance. The temptation to look will be there, but you have moved beyond the need for constant validation. You close the laptop. You step away from the desk. The silence in the room is heavy, but it is not empty. It is the sound of your capital working while you are not. You walk to the shelf, pull down a book, and find a chair by the window. Outside, the world moves at its own pace, indifferent to the tickers and the headlines you used to fear. You take a breath. The air is cool. You open the pages and lose yourself in the words. There is no urgency. There is no panic. You have traded the frantic cycle of speculation for the quiet confidence of ownership. You are free to live your life, fully present, while your wealth grows in the background, invisible and unstoppable. You have finally reclaimed your time. You have realized the truth that most will never accept. The market is not a casino, and you are not a gambler. The people still chained to their screens are playing a game of chance, searching for shortcuts, chasing the next sudden spike. They look for secrets in charts and noise in the news. They want to be right. You want to be wealthy. There is a profound difference. By refusing to play their game, you have actually won it. You no longer need to predict the future because you own a stake in the entire world. When you stop trying to beat the market, you stop losing to it. This is the ultimate shift in power. You have traded the anxiety of the guests for the certainty of participation. You are no longer a spectator of the economy. You are a partner in its progress. This is the wisdom that replaces the constant, gnawing urge to act. You have moved past the need for quick wins and empty victories. You have achieved a clarity that only comes when you stop chasing the wind and start holding the ground. The game was rigged against those who tried to play it. By walking away from the table, you have finally taken control of your own destiny. You can start today. The barrier to entry is not money, but the decision to act. You do not need a fortune to begin. You only need the discipline to plant the first seed. Open the account. Set the automatic transfer. Diversify your holdings across the map of the world. Then, wait. The global economy is a massive, self-correcting machine that has been expanding for centuries. Every innovation, every new business, and every breakthrough in technology serves to increase the value of the pieces you hold. This is not a sprint that requires your constant attention. It is a long-distance journey that rewards your presence. You are now part of a grander design, a participant in the progress of nations and industries. The world is growing, and it will continue to grow long after you walk away from your desk. Do not let this opportunity pass while you wait for the perfect moment. The moment is here. The path is clear. Secure your stake, claim your share, and let the future work for you. You have the map. You have the machine. Now, you have the world. Own it.